Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we're going to be going over a stock that a lot of people have been talking about recently. We're going to be going over the fabulous electric car maker, Tesla. So, Tesla is a stock that a lot of people debate about. A lot of people say that it's overvalued. A lot of people say that it's going to go bankrupt. Their CEO is out of hand. Their business model is not sound. And other people think that it's going to the moon. Other people think that it's going to be a $5,000 stock, a $10,000 stock. A lot of people even think that it might be the #1 stock in the entire world one day. So we'll be going over Tesla. We'll be going over a couple different factors in this video. We'll be analyzing its stock price, seeing where it's at today comparing to where it's been. We'll be looking at why the stock is rising, the valuation of Tesla, and then we'll be comparing the valuations of Tesla to some other high growth names like a Shopify, a Beyond Meat, and Nvidia. We will not just be comparing this company to other electric car makers because we want to compare it to a lot of other companies that are growing at an extremely high rate like a Tesla is and getting a lot of the attention like a Tesla is. So we will also be looking at some financials for Tesla. We'll be looking at its income statement like its revenue growth, its profit, its net income. We'll also be looking at the balance sheet for Tesla like its cash and cash equivalents, long-term debt, and a lot of other things involving the financials of Tesla. And then overall, once we're done with that, I will just be going to their investor relations page and their homepage and just giving my overall opinion about their vehicles in general. No more facts, and at the end, I'll just give my personal opinions about the vehicles, about the company as a whole, and do I think you should buy them in general. But overall, guys, if you're not familiar with me, what I am a dividend investor. I do have these charts right here. This is how I track my annual dividend income, my monthly dividend income, and my portfolio value as well. I did start this channel about 3 months ago today, so I've performed very well in my portfolio in that 3-month time span. We're up to almost $2,700 in the portfolio. So those of you that want to help me and you enjoyed this content, you want to get started with M1 Finance, if you want to use this link below in the description, M1 Finance is the best brokerage out there in my opinion. I love some of the features that it offers. And so far we've had 16 different people sign up using that successful referral link. So go ahead and use this link down in the description right there. There are other sources in that description as well. There are not just the link to sign up to M1 Finance, but there's also links to sign up for other things, as well as some information about me and my portfolio and my investing strategy. So if you want to find out any information about me, go down the link in the description. You can find out everything you'd possibly want to know. And if you want to stay until the end of the video, I will give an update on my portfolio, on how my portfolio is performing, and overall just what's going on in the market. But let's go ahead and get started and dive into the stock price for Tesla. So first of all, Tesla was about a $170 stock at one point last year, almost about a year ago today. So right now, from the time I'm filming this, it's July 7th. And if you see here to about June 7th, so about a year and 1 month ago, it was a $170-ish stock. And today we are sitting at nearly $1,400. So anyone buying this stock at $200 a share, it's nearly 7 times that price from the lows in 2019. Now, even if you were to not buy the stock in the lows of 2019 and you were to miss out on those huge gains in the beginning of 2020 when it shot up to about $900 a share, in the beginning of 2020 in March, when the March lows hit, this was a $300 stock. So a lot of people that are buying the stock now are experiencing a lot of FOMO. There's probably some short squeezing going on, and a lot of people overall are just getting way too excited about the stock than they probably should be. That said, I am overall a bull for the stock. I want to go ahead and get that out there now. That said, I don't think that you should be buying the stock at these levels. I think it's getting a bit ridiculous. You can probably pick it up at a better price. But that said, I am an overall bull for a stock. I think in the long term, I think that this stock is going to be much higher than $1,400 a share. I think it'll be a $2,000, $3,000, $4,000 stock, and I'll be giving my reasons for that. So let's go ahead and go over why the stock is rising. These are my opinions and why I think the stock is going up. So first off, when a company like this, people are focusing on the long term. They're not looking at what is Tesla going to do this quarter with vehicle deliveries? What is Tesla going to do this year with vehicle deliveries or their profits or their revenue or anything like that? People are not really focused on that. People know that the long term for Tesla is that the trend is going to be towards electric vehicles. People are going to shift more and more to electric vehicles in the long run, and valuation becomes a non-factor when a company like this is revolutionizing an industry. You see companies like Amazon and Google, companies that are revolutionizing the tech industry. Amazon trades at valuations that are extremely high, and it's a $1 trillion company. So valuation doesn't really become much of a factor in a growth company like this. The fad is bad, but the trend is your friend. So what a fad is when something spikes up really fast, something becomes really popular all at once, almost like a meme, when an internet meme goes viral for 5 seconds, and then it dies a month later and then no one ever talks about it. That's a fad. A trend is a long-term growth story. And just like with all four of these, you can see their long-term growth stories. For Tesla, it's electric vehicles. For Shopify, it's e-commerce. That's a long-term growth story. For Beyond Meat, it's healthier food options like plant-based products and maybe even lab-based products. That's a long-term trend for Beyond Meat. And Nvidia, it's just overall the cloud space, 5G, just the tech industry in general, a long-term growth story. So the trend is your friend, and that is what Tesla has to focus on with its electric vehicles. In the long run, the trend will be focused more towards electric vehicles. Another huge catalyst that is in the short term here is potentially joining the S&P 500. So second quarter earnings are about to come out for thousands and thousands of different companies, and Tesla's are about to come out in about 2 or 3 weeks from the time we're posting this. But if Tesla posts a profit, if Tesla has a profit on this quarterly earnings, it will more than likely be joining the S&P. Now, here's why this is huge. If Tesla were to join the S&P 500, all these different ETFs, all these different funds. So like let's type in the S&P 500 SPY stock. This is the number one most traded stock in the world. It's the largest ETF in the world, $270 billion assets under management. If Tesla were to join that, every single time someone buys the S&P, they're buying a piece of Tesla as well. Anytime someone buys all these ETFs, look, if we just click funds here and we sort by assets under management, a lot of these have pieces of the S&P in them. A lot of them have a lot of large growth stocks in them. So if we look at Tesla and it joins the S&P, especially with a market cap of $250 billion, if that happens for Tesla, the long-term growth story and the long-term share price appreciation will be just that much better. Not to mention, I think in general, a lot of people, psychologically speaking, will just look at Tesla being a lot more legitimized and being a lot more real of a company once it gets in the S&P 500. To say that it's not in the S&P 500 and that's just a small cap stock really does give them another positive catalyst for this company. And speaking of positive catalysts, I want to just go over some of the main points here. There are so many reasons that Tesla is going up. There are so many awesome positive things that's going for Tesla right now. But just some of the main things I wanted to point out, just like on their website here. Solar panels, a lot of people are getting hyped up for the long term. Solar panels is mostly in development right now, and it's not a mainstream thing, but it is another just kind of a curveball, another potential wild card that could happen for Tesla that could be huge. You have the solar panels, you have their CEO. One of the most famous people on earth is Tesla CEO Elon Musk. I love the guy. He's a billionaire. He's one of the richest people on earth. He's a genius. He made PayPal. He's made SpaceX. He's made the Boring Company. And most of all, he's made Tesla. A lot of people are backed in and even investing in Tesla just because of the CEO, and that's it. Battery improvements. Every single year that goes by, they bought out other battery companies. They've improved their previous batteries, and they overall just keep on getting better and better ranges for their Model S, Model 3, Model X, and Model Ys, and their batteries just keep getting better and better. And one of the biggest restrictions for these electric cars is their range. A lot of people don't get electric cars because they're scared they can't go on a 200-mile road trip, a 300-mile road trip. And now that is becoming less and less of a factor as the batteries become more and more improved. Investor slash consumer demand. So the reason why I wanted to put this together is investors, as you can see, the demand for Tesla stock is absolutely incredible. As you can see, you don't need me to tell you to see how incredibly high the demand for this stock is. Now, even if you're not an investor in this company, even if you hate the company, if you don't want anything to do with it, the demand on the consumer side is incredible. The amount of attention that consumers are giving this stock through social media, through talking from friends to family, to all different types of things involving consumer demand. But consumer demand for this company is absolutely incredibly high and will probably continue to go higher as we talked with the trend is your friend. R&D, or research and development. So one thing that's a really positive catalyst here for Tesla, if we compare it to, a lot of times people compare this to a GM or a Ford. Now, the reason why this company can't really be compared to a GM and Ford is that these companies are falling behind. They're not spending nearly amount as much money on research and development towards electric vehicles that Tesla is. And a lot of these companies are falling behind. You can see the 5-year performance for GM is negative 30%. But for Tesla, the 5-year performance is 258% in the positive. One that I usually talk about that I think is a horrible investment for many people is Ford. Ford is one of the ugliest car companies there is out there as far as an investor standpoint. They're down 61% over the last 5 years. They're one of the number one people that are going to fall behind in research and development. They're not focusing on research and development at all for Tesla vehicles, or excuse me, electric vehicles. They're not focusing on it at all, and I think they're really going to fall behind in the long run. And just other car companies in general, those are the two big dogs that a lot of people like to compare them to. But so many other huge car companies in general are not focusing nearly as much on research and development as Tesla is. So analyst price targets is the next one. Analyst price targets is something that will kind of go hand in hand with investor demand. Now, I'm not really big on focusing on price targets for analysts, but it is something that moves stocks, whether it's a positive or a negative. But analysts are raising their price targets and overall rating their buy ratings higher for Tesla every single day. People are raising their price targets from $750 to $1,000, from $1,000 to $1,500. The amount of price target being raised for Tesla is incredible, and I'm sure that that will keep getting raised higher and higher, which will make people want to buy the stock even just a little bit more. Cybertruck and Roadster. So if we go here, you see these four models right here. You see the Model S, Model 3, Model X, Model Y. There are two vehicles that are being put out in the near future, and that is the Roadster and the Cybertruck. One thing that is not included on here, I also have the semi-truck that will be coming out in the next couple of years, probably in 2021, probably 2022, one of those two. But these three vehicles, Cybertruck, Roadster, and the semi-truck, are three more positive catalysts and three more vehicles that Tesla can try to sell to consumers. And then that's just overall, just some of the main points I wanted to focus out. There are other factors that you could go into. Tesla is one of the most hyped up stocks, one of the most highly attention stocks that there are in the stock market, but those are just some of the key points that I wanted to point out. Short squeeze. So the stock is definitely being short squeezed right now. Those of you that don't know, Tesla is one of the most shorted stock in the entire stock market. I believe for a company of its size, I think it actually is the number one highest stock in the stock market for being shorted. And when this happens, when a stock explodes and it's being shorted as heavily as Tesla is, it absolutely explodes the stock price because the shorts are being squeezed out and they are being margined out on those shorts that they bought at $1,000, at $800, at $500, whatever the case may be. And this makes stock prices explode. You see this with other electric car companies and other electric companies in general. So like Workhorse, for example, is one that I made a video about recently. A friend of mine owns Workhorse at $2 a share, believe it or not. And Workhorse is a stock that has exploded, and part of the reason is because of the shorts. It had about 10% of the people in the float shorting it, and that just drove the price up even that much higher. And it took it from about a $2 stock all the way up to a 20-something dollar stock. And this is happening with Tesla even on a larger scale because more than 10% of the people in the float are shorting it, and it is making the stock absolutely explode. FOMO. The last reason why the stock is rising is strictly FOMO. A lot of people that know a lot of the same things I do, they're revolutionizing the industry. They're a long-term catalyst for growth and share price appreciation. And a lot of people that are wanting to invest in this company were looking at it at $500 a share and saying, I don't want to pay $500 a share. A lot of people are looking at $800 a share saying, I don't want to pay that much, it's too high. $1,000 a share, oh, it's too high. And now that it's skied up to $1,300, almost $1,400 a share, a lot of people are going, oh my gosh, I just got to buy the stock now before I miss out on my opportunity. It might never drop below $1,000 again. So a lot of people are experiencing FOMO, or fear of missing out, FOMO, and a lot of people are buying the stock at sky high valuations, regardless of whether or not it's a bad decision or not. So now let's move on to valuation for the stock. The valuation, when I talked about valuation becomes a non-factor, we will look at valuation just to get an idea for the stock. So the factors that I wanted to point out is that the PE ratio becomes irrelevant and profits and net income become irrelevant. So with a company like this that is mostly focused on growth, like the four names that I gave here, you can see the Tesla stock price is up 258% in the last 5 years. Let's compare this to the other three stocks that I put on the list. Shopify, 2,431% in the last 5 years. As you can see, valuation is a non-factor for this company. They are just focused on the future and on growth. Beyond Meat was a company that the performance is not even going to give you the full story because they IPO'd this stock like double the price that they originally planned. So that number is actually a lot higher than 130%. And I think the long-term growth for this company is going to be incredible. And then the last one that I pointed out here was Nvidia. Nvidia is up 1,640% in the last 5 years. Valuation becomes a non-factor for these companies when these investors get behind them. They do not care what the price is at. They do not care what people are trying to sell it at. They just want to get that price as high as possible. So profits and net income are irrelevant. They want to focus on the growth rate. So the only way that you can really evaluate these companies, in my opinion, IMO, in my opinion, is price to sales ratio. In my opinion, that is the best valuation metric for a company that has little to no profits and is on a high growth story. So those of you that don't know, price to sales ratio, the higher that is, the more overvalued a company is. So to put this in perspective, like Pepsi, for example. Pepsi is one of the boring old blue chip stocks that I own. Pepsi had a price to sales ratio in the twos. It has twice the price of its price to sales ratio, so the higher that price to sales ratio, the more overvalued that stock is. Now let's compare Tesla to a Shopify, a Beyond Meat, and Nvidia. Now, like I said, Tesla's electric cars, Shopify is e-commerce, Beyond Meat is a food product, and Nvidia is cloud space and 5G and the Internet of Things. But the reason why I don't want to compare this to other electric car companies, because there's no company that's an electric car maker that can even be compared to Tesla. Comparing this to a Neo or a Nikola, it is not even in the same ballpark as Tesla. They don't even have their vehicles and fully ramped up yet. They don't have even remotely close to the amount of sales that Tesla does. So let's just go ahead and compare this to some other high growth names like Shopify, Beyond Meat, and Nvidia. So let's look at PS ratio or price to sales ratio. Tesla's is an 8, Shopify's is a 68, Beyond Meat is a 24, and Nvidia's is a 20. So the closest one to Tesla is an Nvidia. They have a 20 price to sales ratio. Tesla has an 8. So to think that on a price to sales ratio basis, even the closest one, Nvidia, is tripling the price to sales ratio than that of Tesla. If you multiply this number times 3, that is about dead even the price of that of Nvidia. So people are pricing Nvidia 3 times higher than that of a Tesla. Okay, so let's compare it on some other metrics. Another metric that I wanted to look at was price to book ratio. This is not one that I follow very closely, and PE ratio as well. Like I said, it's pretty irrelevant, but I just wanted to show you just so I could show you that it is not really relevant for a growth stock like this, just so I can show you the metrics and the numbers. Price to book ratio, 24 for Tesla, 40 for Shopify, 22 for Beyond Meat, and then 18 for price to book ratio. On a price to book ratio metric, it is priced a lot lower than that of, say, a Shopify, who has performed very well and is still pretty close to that of an Nvidia and a Beyond Meat, and those stocks have performed extremely better than that of Tesla. And then we looked at the PE ratio. I just wanted to show this. This is not even to be compared. So like with 3 companies, for example, when a company first becomes profitable, a PE ratio is almost worthless because the profits do not estimate the growth of the company and the overall value and worth of the stock. But at 384 for Tesla, at 2,500 for Shopify, and at 770 for Beyond Meat. So these are not really related because a company like Nvidia that has been profitable for a while, a 48 is pretty high, but that's still in the ballpark for what you could see for a high growth stock. Now, the last factor I wanted to focus on, the estimated 2021 growth rate. Now, a lot of things going on in 2020 with riots and the Rona. I want to focus on the future because a lot of people, when they price stocks, they don't factor in what Tesla's going to do today. They're going to factor in what Tesla's doing next year, the year after, 5 years from now. The same thing with Shopify. People are not buying Shopify for what it's doing today. People are buying Shopify for what it's doing in 2021, 22, 23. Same thing with Beyond Meat and Nvidia. So you can see the growth rate that is estimated for 2021 for Tesla being 39%, Shopify 34, Beyond Meat 53, Nvidia 17. So you can see here, with the exception of Beyond Meat, it is the highest grower on the list, but is one of the worst performers. That is really interesting to me. Now, I think it's just because so many people are bearish on the stock, mostly because of things involving Elon Musk and the fact that it being overvalued. But I think that this stock, in the long run, and I say long run, I more mean like the next couple of months and the next year, I think that you'll probably see the stock well over 1,400. So with that said, let's go ahead and look to the financials of the company. One thing that I think is extremely important for me that I focus on with all my company is the financials. So let's look at the income statement. You can see the last 4 years here. Let's just look at revenue growth and see how it's performed. $7 billion in revenue, and these numbers are in thousands, by the way, as you can see right here. So add 3 zeros to the end of the number to get the actual number. $7 billion in revenue, $11 billion in revenue, $21 billion in revenue, nearly a double up, and now $24 billion in revenue in 2019. And you can see here the gross profit is increasing over the long run. And then the main thing I wanted to focus on was the balance sheet here. So $6.5 billion in cash, which has increased recently. And then you see the long-term debt is 11.6. So this is a ratio that is pretty healthy for a company of its size. It has a 1 to about a 1.5 ratio of cash to long-term debt. They could pay off over half of that debt overnight if they really wanted to. And one more thing that I wanted to point out about Tesla, one thing that I heard like financial education Jeremy recently mentioned just like a couple days ago was the fact that they could issue common stock at these levels for an extremely high valuation. Tesla will have no issues raising money if they need to whatsoever, whether that be through banks, whether that be through debt issuances, through bonds, whether it be through common stock, whatever the case may be. Tesla will have no issues at all raising any type of capital for this company. So financials are pretty healthy for a growth company of this size. Usually with growth companies, it's usually pretty ugly on the balance sheet, but for Tesla, it gets a pretty good rating. I really like what it's doing. And then last but not least, I just want to go over my basic opinions on the vehicles. This is not anything factual. This is just my general opinion on what I think about the cars being cool, being awesome, and what I think is great for Tesla. Now, if you look at the solar panels here, I think they're very sleek, very cool looking, and I would definitely, if they were to lower the price points in the next couple of years, which I'm sure they will, in the next 2 year, 3 years or so, I'll probably look at buying a house. I've mentioned that before on the channel. I would definitely 100% be for buying solar panels for my house if these were at a lower price range, and I'm sure that will happen in the next few years. Overall, just generally speaking, with the Model S, the Model 3, the Model X, the Model Y, I think that they are very sleek, very futuristic, awesome looking cars. Just in general, I think that they are revolutionary in their industry, and I think a lot of younger people, not that are looking to invest in the companies, but just to buy new vehicles in general, I think a lot of people that are in their teens, their 20s, their 30s are looking at these sleek new age cars and will be really intrigued, even if you want nothing to do with Tesla vehicles. If you look at these vehicles, these are very awesome, futuristic looking cars. In my opinion, the Model 3 being the coolest looking, I mean, that is a sleek looking vehicle. A lot of vehicles do not have as cool of looking cars as a Tesla does. So overall, that's just my opinion with Tesla. I think as a consumer, if I were ever to be able to afford it one day, I would absolutely be buying the solar panels as well as the Model 3 more than likely, but any of the models really, because I love what Tesla is doing. I want to support their company. I want them to be successful. Those of you that don't know, I am not invested in it right now. I have considered it, but I mostly focus on dividend investing for now. I'm building that nest egg and getting passive income. But overall, guys, that pretty much wraps it up with Tesla. My opinion on whether or not you should be buying the stock. If you're focused on the long term, if you're wanting to buy this company and you're wanting to hold it for a year, 2 years, 5 years, absolutely go out and buy it. Don't focus on the price. Don't worry about it getting down to 1,300. Don't worry about it getting down to 1,000. Buy it at whatever price you see it at. Now, this is not financial advice. This is not any kind of buy recommendation. This is just strictly for entertainment purposes. In my opinion, I think you should buy the stock if you are a believer in the company. That said, if you're wanting to pick up a better price, you could probably more than likely, let's be honest, pick up a better price than 1,300. If you're looking to buy the stock today and then sell it tomorrow or sell it a week from now and try to get a quick flip, don't touch it. Don't look at it. Don't even think about buying it. There are other opportunities out there. But yeah, I'll give a quick update on you guys for my portfolio if you made it all the way to the end. So far, the portfolio has been doing very good. On a time-weighted return, we are up 12.66% in the portfolio. Today is a red day, and in total for a money-weighted return, we are up 18.07%, $344.05 coming from total gains, 320.11 coming from market gain, and earned dividends is $23.94. You can see my recent activity here, especially if we sort by dividends right here. We did just receive some dividends from Kimberly-Clark, Coca-Cola, Pepsi, Broadcom, and you can see the list right here for my recent dividends. So far, we received 2 in July with the month just starting. And if we scroll down here and we look at my biggest gainers in the portfolio, same names, Discover, Whirlpool, Apple. If we sort by biggest losers, we are still down on 6 of the 31 companies. Verizon, Dominion, Southern, Starbucks, WP Carey, and Store Capital are the ones that we are down on. But overall, guys, thank you for watching all the way to the end. If you made it this far into the video, we sort by value here. You can see my #1 holdings. But if you made it all the way to the end of this video, please go ahead and check out the description. Even if you're not interested in signing up with M1 Finance, there are other things in the description as well that I really want you guys to check out. But if you're interested in getting signing up with M1 Finance, I have other videos reviewing the brokerage. Just go ahead and check that out, and you can use this link. And please, it would help me out a ton to give me $10 just for getting signed up using that link right there. But overall, guys, we'll keep buying stocks. We'll keep tracking this dividend income. Yesterday, I did make a purchase. You see my afternoon trading here. I did buy 11 of my 31 companies, and I'll just scroll through here if you just want to see what I bought. Dominion had a very low down day, and I will mention that in the next video. I will be going over some news articles for my portfolio. But overall, guys, if you made it all the way to the end, thank you guys so much for watching. I really love you guys. Thank you so much. If you want any questions for me to be answered, go ahead and leave a comment down below there in the comment section. Any questions about any stocks, about Tesla, or just the market in general. Thank you guys so much for watching, and I will see you next time.